Afternoon and welcome back to everyone who is joining us for this afternoon's session. Whilst delegates trickle through into the platform, I'll do a quick intro. This is the penultimate session of the day, so we're about to start looking at how businesses are raising funding for co-located solar and storage. And then the final panel, just to let you know, we'll look at the Spanish auction, which completed last month. So quite a lot of interesting content to get through this afternoon before you can go and grab a drink or what have you. I know certainly I will. So I would like to say a very big thank you to all of our supporters this week. So a big thank you to Smart Energy, our host sponsor, Huawei, Grand Solar, Trina Solar, Jinko Solar, Longi. Thanks also to our bronze supporting and exhibitors, so Axpo, DuPont, PV Hardware, Exergy, Rena, Telus and Solace. So thank you all for your support. Obviously, without our speakers, the event wouldn't be possible either. So we're about to sort of hear from a great panel of experts looking at co-located solar and storage. So we'll be welcoming David Kemp, who joins us, not from DSK Advisory, I must apologise. He's actually CEO of Emanate Capital. And we've got Olivier Fricot on the line as well, who joins us from INVESTEC, Peter Kavanagh from Harmony Energy, and Marc Henderson from GRIDSERVE. David, I'll pass over to you as the moderator session to sort of take the floor, and I'll be here in the background if you need anything. Thank you very much.
Thank you very much, Joe, and good afternoon, everyone. I think we've got a really sort of interesting panel today, trying to take on the challenges of financing and developing co-located solar and storage assets in particular. And I'll let each of the speakers introduce themselves briefly. But my name's David Kemp. I recently left the project and infrastructure finance side at M&G Investments after about 9.5 years. I've just started an independent advisory business called Emanate Capital, as Joe says. Next on to Marc Henderson.
Right, I should unmute it before I started speaking, which is a nice change. Good afternoon, thank you very much. Yes, I'm Marc Henderson. I'm Chief Investment Officer of GRIDSERVE Sustainable Energy, we are a developer, clean tech developer of critical sustainable infrastructure. So we do solar and storage projects, as well as electric vehicle charging stations. That's what's behind me. It's our first site, which opened at the end of last year in Braintree in Essex. I've actually been a banker on the banker side of the table all my career until recently, doing project finance. So I have had the ability to see both sides of the story here. And naturally, of course, I pick and choose what's most favorable one for me. One of the probably the best things I did in banking was recruit Olivier Fricot, who obviously we've worked together for many years, both as colleagues, but also across the table from each other. So if we start just talking to each other, just do give us a nudge. That's all for me.
Thanks, Marc. What a wonderful segue into Olivier.
Thank you, Marc. I've done the opposite journey. I started as a developer in the dirty gas and diesel engine industry, and then I move into banking. I tend to do things the wrong way. But for those who don't know me, Olivier Fricot, I work at INVESTEC. We're a specialist lender, and I look after primarily debt product, debt transaction, and we've been very active in, subsidized renewables and unsubsidized. But interestingly, in the context of battery sector, we do a great deal in merchant power, more on the thermal side, and we've got a very good understanding on the intricacy of merchant power trading, balancing mechanisms, and the like. And we've got I mean, we've got a good appetite for merchant risk, which hopefully will be helpful in this brand new world. So I will pass the baton to Peter, I guess.
Hi, good afternoon, everyone. I'm Peter Kavanagh, Chief Executive and founder of Harmony Energy. Founded the business 11 years ago. At that stage, it was a wind developer where we developed, owned and operated 15 sites in the UK. And 5 years ago, we started up the energy storage side of the business. That's really where the main focus is today, is on unsubsidized batteries and unsubsidized solar predominantly, but also onshore wind. So in terms of where we're at today, we have about 600 megawatts of construction ready battery sites. We built our first one and switched it on in June last year. And the second one, which is 34 megs, is coming on stream. It's been built at the moment, coming on stream at the end of June. So yeah, very happy to be on today's panel and look forward to the discussion.
Thank you all. And Pete, I might stick with you for a minute. Having developed wind and solar and now utility scale batteries, is combining them the next step for you? Are you looking at co-location seriously?
Yeah, so we're looking at co-locating battery and solar seriously, only on new sites, not existing sites, just because it's quite complex to do that on existing sites. I'm not saying it's the wrong thing to do at all, but we've got planning permission on a large 30 megawatt solar site in East Yorkshire, and we've just got a battery connection for the same matching import. So we're looking at doing it there. Yeah, it's an exciting space and there's been a lot of talk around it. I think getting the economics right are obviously very key because it's completely unsubsidized. So we're going to look at doing this on as many solar sites as we can coming through, but it's not always easy finding those sites where you can get the right connection capacity on the grid. So typically we find getting the exact matching capacity is quite challenging. But where we can do it, we think the economics make a lot of sense, and blending the two provides a pretty attractive return to the investors.
And Pete, why do you find it easier to focus on the greenfield opportunities? What are some of the main challenges you'd see for trying to subsequently locate storage assets on?
So, I mean, to be more transparent, we sold most of our wind portfolio last year anyway, the year before last. So in terms of the right wind assets, we just don't have the right assets in the portfolio to do it. So what we would look to do is add solar into existing batteries when they're built out. But that's more of a planning issue in terms of we secured the grid because the battery's already there. But it takes time, obviously, to get the solar through planning. So, our process is more about putting the first greenfield site in and developing both assets together. I think if we had, a battery system which was operating now, and it was next to, right next to a great plot of land where we could insert big solar, we probably would do it. It's just really, what's in front of us now. And that site in East Yorkshire is the sort of perfect starting point for us.
And Marc, it's amazing the range of applications that GRIDSERVE have found for batteries. Do you see any do you have any sort of particular sweet spot for co-location, whether that's size or location?
We don't really have a sweet spot as such. I mean, we like to do projects more in the 20 megawatt to 50 megawatts range, but that's just really to get more of the benefits of scale. We certainly set out to try and do the projects together at the same time. I was going to chip in on when you asked Peter about adding co-location, adding storage to a solar project. But it is clearly going to be much easier to do it at the same time and build out the infrastructure together. There's also a few commercial as well as financial problems of trying to retrofit sites, because if you've got a project financing, for example, for a solar project, then you're going to have to negotiate with the lenders for adding on a storage to it. But we can throw Olivier under that bus later on. But no, I found that if we can get a site where we can get around the grid problem, and Peter touched on that, there are good constraints about what size of battery you can put on, then it clearly just improves the economics so much more to be able to have the storage with it. So, everything we do in the solar world, I think we'll be doing with storage as co-location. What we've done as well in terms of trying to optimize things is just to see what different markets we can be playing in for the power. And in fact, one of the reasons why we have these electric forecourts, in addition to the fact that we need more infrastructure to support the growth in EV charging, is to actually provide an offtake for our power as well. So we can be selling to the grid, we can be selling to corporate PPAs, but we can also be selling through sleeving contracts to our electric forecourts as well.
No, thanks, Marc. And I suppose when you're trying to potentially blend together two assets that have had different cash flow profiles and investor appetite, when you're trying to sort of fit those together, have you found it difficult to fit together the financing as well?
Believe it or not so much, but that's only because the solar just assists the leverage on the storage tremendously. As I'm sure we'll all be saying, to go further on, it is difficult to raise the financing for storage and storage only projects. So in many ways they can be seen and be modeled as two separate assets with very different revenue streams and very different risk profiles. But at least by having them together means that you can be leveraging more on the solar side, which you can obviously spread across the whole project. So for the gearing on a combined solar storage project, it's better, certainly better than you'd be getting on a storage only project. One thing we've also done is in the design of our recent projects is we've tried to also make the power output more useful. And by more useful, I mean that generate more throughout the day rather than having the solar peak one normally has at midday on a fixed panel array. And what we do there, what we have done is we've used bifacial panels, which just given the cost of those improves the output more than the additional cost of it. But also we've put east-west trackers on. Now, trackers, for some reason, people feel isn't a useful technology for the UK. I'm not sure why. I think perhaps in the early days that they really needed to be, they were quite expensive, so you only use them in very sunny areas. But the great thing is that that cost has come down enormously, as so many costs in this sector have. And therefore it just allows the output to, rather than having the steep bell-shaped curve, it just is a squarer profile, which means you're generating much more evenly throughout the day. But it also means that for many months of the year, you're also capturing much better pricing points because you're capturing the shoulder periods at the beginning and end of day. That's quite a long answer.
It's a good one though. And Olivier, one of the things I've always admired about INVESTEC is that you're not afraid to stray away from the vanilla. You're always sort of happy to look at new ideas and more complicated structures and to do the work. And I wonder sort of what you found to be the main challenges of funding standalone battery projects, and whether it's easier or harder to to fund co-located assets. We're just on mute.
Sorry, the usual mistake. I'll need at least 3 or 4 years of this lockdown to get going. No, look, collocation. I think you look at it from a simplistic standpoint. It's something. If I was a developer and an owner of a wind or solar asset, I would want to make sure that my sites are absolutely ready for batteries, because there will be more cannibalization across the board, and people will want more renewable power, as we can see already, and that ability to stretch your generation to time when it's needed is going to become critical. Now, so I think collocation will come in a big way. Now, what we see as the big challenge to financing is actually the fact that we're struggling to push the gearing up. And as a result, I think to give an order of magnitude, every 6 months we look at battery and we rescrub, because we know this is going to be coming. And effectively, currently we're probably 30-40% gearing. And I think at that level, equity, either you've got the equity and you may say, why bother with painful lenders who will put some nasty conditions like cash sweep, which is never good for equity, or you don't have the equity, and then that's an issue. So I think for us, it's finding the right sponsor for whom I guess the debt will make sense. I think if you look at it from a cost of equity versus cost of debt, is definitely a benefit, because even though the debt will be expensive, it's not going to be as expensive as equity for this type of project. But I think it's just the gearing is not high enough. So what we're checking is CapEx, and I guess any change in regulation. So that's big picture. And then the next question is, why can't you get the gearing up? And I think it's down to the revenue streams. And the big challenge we've had in batteries over the years has been batteries have played into a number of markets, and those markets are often very shallow. And so when we looked at battery storage probably 4 years ago, and everybody was after, we're gonna do SOAR contract, we're gonna do frequency response and all those good things. And we looked at the depth of the market, and the question we asked the developer was like, you've got an 18 months or a 2-year contracts maximum. How confident are you, or we're not very confident that you're going to be recontracting at the same price? I said, no, that's going to be fine. And then you fast forward 3 years, and that market has crashed down. Now, the flavor of the day is playing in the balancing market. And if you think about it, the balancing market, it's not just for batteries. So every big generator is playing into that, and they've got some benefits in that they've got the duration that battery often don't have. But it is still a very shallow market. And as a result, the concern we've got is that, if you fast forward 2 or 3 years and you've got more assets on the bar, is it going to have an impact on effectively the pricing and the revenue stream? So we're looking at it. We say to sponsor, look, if we were to fund with you, you're the owner, you optimize the battery and your revenue streams. But the way we will look at it from a sizing credit standpoint, we'll look at it more as worst case scenario, you're going to have to play the arbitrage. So which we think is a deeper market. And unfortunately, you only have 2 peaks in the days. And you do the maths and you assume a certain spread, and it's difficult to get your gearing very, very high. And I guess that's the main challenge we see.
And do you find is it harder to get the equity needed, or the debt? Is one harder than the other?
Look, I think on the debt side, there are people, you're not, well, it is merchant. So I think, you know, would the traditional commercial lender be ready to go project basis without a strong corporate backing behind it? I'm not sure. I think on the other hand, you will find some, you know, high yield money that will be happy to play on the with the right structure. So I don't necessarily think this is going to be necessarily the challenge. Also, the benefits of batteries projects aren't particularly big, so you know, it's not as if you're going to raise $500 million in one go. So my sense is, you know, for the right structure of a debt will be around. Now it's back to the equity question, and I see it more as binary. So if you look at the listed fund that are specialized in equity, I mean, they can go full equity. Some of them have started sort of looking at putting a bit of you know, RCF or the like. But at the end of the day, you know, do they want the pain of debt? It's a question mark. And then if you're short of equity, then because the gap is very big, it is probably going to be, it is a bit of a struggle, I think.
Yeah.
But look, things are going to change. So I want to see things positively. Things, you know, you fast forward, you know, 2 to 5 years, the world will be very different.
I see debt as being harder. I'm picking on that last question, David. Debt is definitely harder to get hold of than equity for this. I mean, just because it, as you say, there are yield co's and infrastructure funds, as well as utilities who can finance these on an equity basis. It may be harder for the smaller independent companies to raise the equity, but
yeah.
Debt is generally more of a stumbling block, or at least debt in the format that you'd want it.
Yeah, it's finding the you know, the right structure for an half empty person like me will be very different to the debt for an half full person as you are, Marc.
Yeah, exactly.
Yeah, I mean, I would add the sort of comments you've already said, but you know, I think from our side, in terms of experience in the debt market, it is tough, and getting up to 40% gearing at the moment is about right. I think, you know, you can obviously get above there depending on your capex and the view that the debt lender's taking. I do think actually the next 12 to 24 months will be a big change in that market. And Olivier, I'd be interested in your thoughts on this, but in terms of where banks and debt lenders generally are going to deploy capital, they are going to be forced into more merchant markets, whether they like it or not, in order to survive, I think, over the next 5 to 10 years, as we rightly see subsidized income streams diminishing. I think, you know, I think the pressure will come from, you know, pension funds have to deploy capital, banks have to deploy capital, and it's just getting more comforting in the way battery assets are trading. You know, there's an awful lot happening at the moment. Last week, you know, we saw the first time that dynamic containment was stacked with trading in the balancing mechanism. So the more changes we see coming through like that, the more debt will become interested in the market. But, you know, we do need those trading strategies to prove themselves more before we see sort of easier debt coming into the market, for sure.
And Pete,
Yeah, we have to build up a track record of revenues for these assets.
yeah, and is it just revenues, or is the choice of technology also important, Pete? How important have you found that?
Yeah, choice of technology is very important. I mean, you know, obviously storage at the moment in the UK, it's predominantly lithium-ion battery. There are, you know, interesting technologies coming through all the time, from flow batteries to, you know, High-V with their compressed air looks very interesting as well for that longer duration solution. But lithium-ion is so well proven as a technology. Really, it comes down to how you're going to operate a battery in terms of how hard you're going to cycle it, what are the warranties behind it, what duration you're going to select, and trying to drive the capex down to as low a position as you can. From a developer's point of view, essentially the main value add you can have is, you know, the economics on the raw site, i.e., you know, how much is your grid connection, trying to keep that as cheap as possible, and then really tendering out, you know, through a competitive process to try and drive down the price of the development. And the cycling and degradation of the battery and your strategy is obviously key to making it work. And it's not straightforward. The jury is split on terms of what exact duration of battery you should go for example. At the moment, if you've got a battery operating and you've got a sub-hour system, the economics are extremely attractive because you're in dynamic containment, and annualized at the moment, dynamic containment's sort of providing £150,000 per megawatt, which is exceptionally attractive return. But it won't, like Olivier referred to earlier, that market will become saturated fairly quickly, probably within inside of 2 years. And you've got to look beyond there to say, what are the deeper markets? Okay, that's intraday and day ahead, extremely big markets. If you can make your asset and trading strategy stand up in that market, you've got a great asset. When you compare the returns versus, say, offshore wind, for example, it looks pretty attractive long term.
I think one of the other challenge from a debt standpoint, or difference between the debt and the equity side, is I think you look at the capex of those product, and I guess it's the same to some extent with any form of merchant renewable. The cost of the grid is becoming absolutely critical in the capex, but the flip side is, once that is sunk, it's not. If you look at a first life of battery of say 10 years, for argument's sake, I mean, you could have another 2 lives, and I guess equity will take that into account. Debt will sort of think, hang on, once it's got some value, I'm going to have to spend more money beyond that, and it's a bit uncertain. So I'm not prepared to touch it yet. In the same way as when people started on renewables, they said, we're not going to go beyond beyond the end of the ROC period, or we're not going to go beyond the duration of a PPA. Now, what we've seen is certainly in Iberia, for instance, that banks are sizing on PPA plus a negative tail, and that's something that would help on the gearing question.
And are there any sort of, I suppose, with that revenue volatility and some really good returns now, do you see that influencing the types of funding structures that that lenders are interested in, Marc? Do you see more?
Yes, it was interesting. I was just about to interrupt Olivier when he was saying about the longer periods, because I was actually thinking that some of the structures we've been playing with are looking the other way around in actually just having shorter periods, because the glass half empty lenders are usually comfortable for the first few years. So can we do something where we're taking just a shorter term one? Clearly there's a refinancing risk, but I think given the value of batteries, depending how they're used, of course, that the value does stay there quite well. So that should give some good security for the lenders. So I was going the other way and saying, actually shorten if you can get the gearing up by shortening the period, that would help.
Yep.
The other thing is just looking at the structure slightly differently. Whether people can be more flexible in saying, okay, we don't need to have the traditional 12, 15-year equal semi-annual repayment structure with project financing. Can we just have a period where we do a cash sweep, for example? Obviously, we've got to allow the equity having a certain level of return, but if we agree what a kind of base level of return is, and then we kind of cash sweep or profit share above that to bring the principal amount of the debt down further, almost like a pay-in-kind structure.
Okay, I mean, as an half-empty person, I will have my cake and eat it. So I'll take a bit of scheduled amortization and some sweep. But those structures are, I guess, they exist and they've been done in the merchant space before. So I've no doubt at some stage they will come back. You just need, I think if you look at the evolution of the market, I think before you start running, you're gonna have to walk, and the first structure will probably be more conservative, and the market will evolve in a way where it's more aggressive. But I think you need to, given where the market is at the moment, you probably need a bit of unfortunately some degree of conservatism.
Yeah, I don't disagree with that, as long as people are prepared to revise their views as the track records are developed and as the portfolios are built up.
Yep.
People in other parts of the project finance world happily finance toll roads, which is about as merchant as you can get in terms of risk and as the likes.
And do you find that, is there a one-stop shop for financing now in terms of, on the renewable side, if it was more of a project financing, on the storage battery side, perhaps it's more of an asset finance play. Does that limit the types of lenders that you're talking to? Those like Olivier that like non-vanilla, those that are a bit more joined up internally and can get a couple of teams working on it? Or are you talking to the same people, Pete and Marc, that you did in the past?
I'll let you go a second, Peter, but I was just going to say that we're certainly seeing more from the leasing world, the asset-based finance. They take a different view on it and look at it. It's a different structure, but given the security of the physical battery, I think that's quite an interesting alternative route as well. What about you, Peter?
Yeah, it's broadly similar. It is mainly the same names over the last few years, but I do seriously see that expanding over the next 2 years. I just think there's so much batteries coming through onto the system in the next 12 to 24 months, and provided those assets perform well and lenders can get more comfortable and consultants can therefore increase their forecast on where they think the market will go, and battery prices falling, etc., I think it will be a natural place that more the high street lenders will play in eventually.
Well, if nothing else, it's a good hedge for them, isn't it? Because we're going to have more intermittent power coming onto the system over the next few years. So we need batteries there to stabilize it.
Yeah, absolutely. And what we're seeing at the moment is, I think the terms are attractive over obviously a shorter term of debt, sort of around the 7-year mark. And I think the view that lenders are taking, right now, especially if you've got assets trading right now, the revenues are going to be very attractive for the next 12 to 18 months at least. So they're taking a huge amount of comfort from that.
Yeah.
And Olivier, do you have a view on appetite for residual value risk on batteries? Is that something that you think the market's ready for yet?
It's something we're definitely thinking about, because as I said, you look at the capex grid connection has got a significant value, and I guess as you go into second life, you're not going to have to pay for it again, and you're not going to have to pay for a balance of plant again. Being an engineer, my sort of the niggling bit in my mind is obviously technology will have moved on in the next 10 years. So is the modularity of changing effectively the battery pack itself, will it be enough or not? So that's the only thing in my mind. But I think if you look at it positively, and you listen to to the OEM and the developers, this should be fairly straightforward. And not only that, those packs should come down. So certainly when we do our credit analysis and look at sort of downside scenario, if basically the notional or the worst case scenario leads you to go beyond the sort of 10 years first life and go into the second life, I think you can probably you can probably assign some value there, or at least get some benefits in the residual life. Because again, if you ignore it, which is what we've done up to now, you know, getting all your debt back in 10 years with some reasonably conservative cover ratio, it makes the gearing question tricky.
And Pete, if there was an owner of a large portfolio of renewable generation assets, what would be the sort of thought process they'd go through when trying to work out whether it's worth their while looking into co-location of batteries at the various sites versus just doing a large scale utility scale standalone battery project? You know, you've got the economies of scale of the big utility scale battery project versus the benefit of using land and grid that you've already got on the other sites. What are the main factors there, and at what point would one become more compelling than the other?
Yeah, it's an interesting question, David. I'm not sure I'm sort of the right person to answer that. I think it's more of a Scottish Power SSE question. I think, you know, when you look at those bigger utilities, obviously they've got, you know, all the assets are, most of the assets they've got are subsidised. So they're probably not overly focused on it at the moment. But, you know, I think probably the best example is Scottish Power on Whiteley Wind Farm, which is one of, I think it's probably still the biggest onshore wind farm in the UK. They are, I can't remember if it's actually on stream yet, but they're building out 50 megawatt battery on that site. So it clearly makes sense. And I think it does come down to sort of locational value of building out on that site rather than starting from scratch on a greenfield site. So for example, if there's, you know, financial sense in them building it at Whiteley because of the balancing mechanism, for example, then they'll do that. But it's very location specific at the moment. Whereas if you probably looked at, you know, Ørsted have got, you know, very attractive contracts on the offshore side. Maybe they're going to focus more on hydrogen because in 10, 15 years time, the cost of that will make more sense. So there's a lot of variables in there, and, you know, the big utilities have the luxury of time and subsidised revenue streams on those larger assets. I think from, you know, assets which are unsubsidised are different, and that's why we and others are focusing more on this co-location, because you have to make, you know, it's in the interest of the taxpayer and all stakeholders actually, because you have to think more creatively to make the value stack up. For example, what GRIDSERVE are doing, Marc can elaborate on more in terms of, you know, utilising basically the off-taker being the electric car consumer. Great idea, very efficient use of the system, but you've got to think more creatively when there aren't subsidies available. So sorry, I hope that's answered the question, Marc. But, you know, I think the sort of bigger utilities as well are interested in doing the standalone projects, because you can make the battery stand up as a very attractive investment if you've got the appetite to take that risk. And it probably makes sense for them to experiment more as well in terms of seeing how well the asset can be traded through their own trading desks and seeing how it will stack up in the BM in particular.
Yes, if they've got a large trading desk, they probably don't even need to separate out the battery revenue. It's just nicer to have it as part of their virtual power plant. But yes,
look, this is what I think. As people and sponsor move away from subsidies, whether because, you know, let's not forget about the first subsidy will or projects that had sort of rocks will come out in 2027. So it's gonna, from that point on, you're gonna have a lot of assets that go merchant. There will be more focus at sponsor level around, you know, how do you optimize that? And I think in the same way as you're probably going to need to think about trading, you're going to have to think about battery. And I guess what we're hearing from some of our clients is that they are looking, and in a way they're looking at it a bit like us as a lender, in that they are saying, look, it's going to make sense, it's going to come. But you know, at the end of the day, we've got the site, we've got time. You know, are we better off going now? Or are we better off waiting 2 or 3 years? And I think so far, you know, the message we keep hearing is it's you know, economics they would want to see a slightly better economics for the time being. Flip side is, you know, if you're a big fund manager where heaps of solar and or wind, you know, if I was one of those fund manager, I would probably start investing onto some pilot projects just to see how it works and what kind of benefits it provides for a bit like R&D. But I'm not a fund manager.
Not yet.
Yeah, I mean, you mentioned cost changes. I mean, I think obviously the on one half is proving up the revenues and the revenue stack and how the whole model works. I think some people have also been holding off because there has been such a dramatic reduction in storage prices over the recent years. But I don't think it's going to fall an awful lot more. The batteries alone might and will fall more, and they'll become more efficient. But when you do a battery storage project, there's a lot more in that shipping container than just the batteries. There's the air conditioning systems and electronics. And so I've forgotten off the top of my head what percentage of battery normally is of the overall cost of a battery energy storage system. But when you take that whole system, as I say, even though the battery might reduce further, as a whole, it's not going to be significant amounts, certainly for the next few years, unless somebody comes up with some revolutionary new technology, which will then take several years anyway to mass produce and roll out.
Yeah, I would agree exactly with what Marc said. And, you know, interestingly, we're seeing constraints in supply chain this year on batteries. So, you know, it's the curve maybe isn't as dramatic as some people are anticipating. I do think it will come down, but the makeup is about 50% on battery cell costs. So, you know, it's not just like Marc's saying, rightly saying, it's not just about that lithium-ion battery cell pricing. And there's a lot of clever stuff happening with technology in terms of reducing the content of different metals within that lithium-ion cell as well, which will hopefully drive down price long term. But you know, maybe it's not going to happen as quickly as some people think. And I think it comes back to the revenue returns as well, marrying up the two. And you know, if you're in a position to build a site tomorrow, you would do it because the revenue tractions for the next 2 years are very, very strong. But you've got to be willing to live with the sort of the merchant nature of the battery. Mm-hmm. You know, you're looking at a very quick payback if you can build out now and you've got construction ready sites. Whereas if you're going into this from afresh and you're taking 2 or 3 years to develop a site, the economics are going to be very different again because the market will be more saturated by that point.
Mm-hmm. Yep. Yeah, agreed. Go now, carpe diem and all that.
Absolutely.
And Marc, with perhaps with the lower loan to values and the higher need for equity for these types of projects, any lessons learned from your equity raising experience?
In terms of lessons learned, I think, well, perhaps one sort of upbeat comment perhaps is that it's getting easier. I think when we first started looking at selling projects or even just investment opportunities to people, it was a confusing story, partly because there were so many different revenue streams and they're going, oh, hang on, so we've got a capacity market, can we do that at the same time as a frequency response? And I remember sitting down with one fund manager several times, and by the end of it, he's like, I've got it, I think I've got it, but there's no way I can repeat this to my credit committee. So it's like, don't go any further. But that's got a lot easier, and I think a lot simpler, that story. And hopefully, if we can find off-takers who can provide some kind of PPA or off-take agreement, that would certainly be a way to make it easier. In the absence of that, the lesson we learned was to try and help create our own offtake, which is, as Peter kind of mentioned earlier, one of the rationales for this electric forecourt, so that we can actually just have the battery there, and it's needed as a buffer between the forecourt and the grid, but it generates revenues on its own, and it is a way of selling it into the electric vehicle market, where the margins are a lot higher than they would be on the retail market or wholesale market. So I suppose the only other lesson learned, I say, is just make sure you keep your options open. The products and the needs. I mean, we know National Grid have been working on a whole range of new products. So we're certainly perhaps hedging our bets, or I prefer to say keeping our options open to make sure we can fit in with whatever comes out as being the next new market.
I think one of the interesting thing that maybe a signals to come is when off-takers are going to say to asset owner, look, if you've got a battery attached to your renewable project, I'll give you I don't know, 45 pounds a megawatt hour, but if you haven't, I'm going to give you only 35. And that's where I think that hasn't been that hasn't been the case yet. But I think if you were to fast forward 10 years with a lot more I guess negative pricing and cannibalization, that is something that is not necessarily beyond the imagination.
Well, certainly the cannibalization and negative pricing is a really strong argument for having co-located solar and storage assets. Absolutely. And that's why you also want to have them physically co-located as well, having them virtually.
Yeah, you don't want to have to pay distribution charge and start trading. And I guess it gives in the world where everybody will want to go renewable and green. I mean, there's definitely a need there.
Mm-hmm. Yeah.
And do you think we're pricing in the sort of end of life costs for batteries effectively at the moment?
Yeah, I mean, there's various ways of price. Sorry, Dave, you mean from the economical standpoint, or recycling, or?
Yeah. So at the end of life, what happens? Alternate use versus trying to dispose of them effectively. Are the sort of potential costs and or alternate revenues from the end of life batteries priced in? Are you thinking about those in your modelling at the moment?
Yeah, I mean, effectively in the modelling, you have to write off. I mean, different firms use different approaches. Obviously, there's a lot of value left in the site after 10, 15 years. But to be conservative, you probably need to write the site value to zero at year 15, which is actually, in reality, you've got a lot of value in the stuff outside of the batteries, as Marc alluded to. It's not just batteries you have on these sites. So there is a lot of value there. But from a funder's point of view, whether it be equity or debt, everyone wants to look at it that the value is written down to zero, and you incorporate some liability either through your EPC contract to ensure the batteries are recycled, which I think will ultimately become legislation. And I think that's a positive thing for all stakeholders, because 95% of a lithium-ion cell, probably a bit more, is recyclable. So there's a lot of logic to making sure that happens, because the people who are sort of still a bit anti-renewables will always point to that. And if we've got this wonderful system where we can recycle it, let's do it. Let's put out that argument. So and also it depends on how hard you cycle a battery as well, as to how long the battery life is. So when you're looking at building out a site, you need to model in how many cycles a day you're going to be discharging and charging the battery. If you're doing things like frequency response, it's very light. If you're doing things like trading, which is where the deeper market comes in, you're going to be working the battery harder. It's going to be worth less at year 10 than it would if you were just doing frequency. So all these things need to be built in. And, it all comes back, and Olivier will emphasize this on the banking side, you're going to look at the most sort of distressed scenario of cycling the battery quite hard to trade in the, the day ahead and intraday markets rather than doing frequency. You won't get away with a banking assumption that says you just do frequency for 15 years and hardly cycle the battery, because that's not realistic. So I think, so long as you're building in those sort of conservative assumptions to your modeling, you're okay.
Mm-hmm. Mm-hmm. Yeah, we like to think we're pretty conservative with our modeling, and rather than assuming that there's some batteries there all the way through and then suddenly ends, we're assuming a constant program of just recycling and updating, so replacing it much more along the way. So at the end of 20, 30 years, we've probably still got a fairly very expensive, but a fairly good life remaining in the batteries. You can then get into discussions of how you actually dispose of them, but that's a whole different subject.
Personally, I think it will. If you think about the industry without thinking of what's going into the automotive sector, there will be an entire recycling industry that starts to emerge in the same way as a lot of steels get recycled. They'll do it even more on battery, given the nature of the product. So I certainly as a lender, we don't we think about it more as to, if you need to replace it, you're going to need new pack, but we don't think about sort of disposal and end of life. But I guess it's more an equity question in our view.
It's going to become cheaper, obviously, to replace the cells in 10 years time anyway. So you have to make a broad assumption on where those prices will be. But
and as I said, it's something. I mean, it's a bit like inverter in the solar industry. You look at sort of the project we're doing in 2008, 2009, the assumptions we had for inverter replacement, and now it's completely different. Now, what I'd be curious, again, it's a technical question, is whether you can actually easily replace an old technology inverter that was put, on a 2009 or 2010 vintage solar park with current inverter, because again, it's back to the engineers and the salesman tell you, well, that's easy doing, and then suddenly when it comes, they're going to say, well, actually, control system is different, this is different, and it's going to cost more. But we shall see in 10 years' time.
And Pete, you mentioned supply chain earlier. We've got a quick question through, just touching on domestic production and how much of an impact that might potentially have, particularly sort of domestic production of batteries sort of traditionally built for the automotive industry. Do you see a sufficiently strong UK supply chain emerging?
I think the UK is a very exciting market for everyone. Globally, our system is probably ahead of others. I think it's fair to say. So I think the domestic supply chain will grow exponentially. There's a lot of people with, we've got solar on the roof, many others have. It's going to make sense when the prices come down a bit further. Even today, depending on your load usage, it makes sense. And also with EVs and domestic and utility scale storage, what you'll see is that the chemistry will vary. So I think we can get to a system where actually, you can use cheaper cells for domestic storage and utility scale storage that we're doing versus what you need for EVs. You can use slightly different chemistry. So I think, the domestic market will definitely grow. And I think, the people will just look at the economics and how long they want to be in a house as to whether they want to buy a battery for it. But as things progress, it's going to make a lot of sense. But actually, on the other side of it, you could look at it and say, well, if everyone's going to move to EVs, Marc would be much better positioned to comment on this, but how do we integrate those into the grid system and make it, I've got an EV, but I can't use it to charge the house. If we can reverse that flow of power, that's going to be super exciting when that comes. And people have been talking about that for a long time. So actually, the need for lots and lots of domestic batteries will depend on how that progresses as well. If everyone gets an electric car, do we need to all have domestic batteries? I think there'll still be a requirement, and it's still a good market. But how big it will be, I'm not certain.
Marc, domestic battery or battery on wheels?
When you say domestic battery, not domestic production of batteries, but having batteries in houses. I've been cynical for some time about vehicle to grid. I can see it from a logical and from an engineering viewpoint, it makes so much sense. It really does. I just don't know if people's habits and expectations are such that they'll naturally find it easy to do. Some people will, of course, assuming it's all capable of being done. But I think there's also just a mindset of people like their car being filled up, whether it's petrol or electrons. And so there's probably software one can develop which says, yes, by the time you get up at 6 in the morning, it will be fully charged and you can drive it off to work. But the people will probably still have the what if mentality. Well, but what if I actually get an emergency call in the middle of the night and the car hasn't charged yet because it's been busy propping up the grid? Just the same way with electric vehicles, people go, oh, I probably only drive around the 5-mile radius, but once a year I take that long holiday trip to Scotland, and so I need to have a battery which can do 500 miles. So that's the exception which proves the rule. So I think there will be more domestic batteries. I can see that them being installed more easily than I can a vehicle to grid system being rolled out on a domestic basis.
I think it's interesting. We're invested as INVESTEC into a fund, that US-based fund that invests into sort of startup that are related to energy infrastructure. And you see like people with thousands of ideas, and I think the technology will be there. It will be, people who are, with their mobile, they'll be able to decide, what they do, and they'll play, and they'll probably end up playing for, a week with it, and then they'll put it on auto, and somebody will make money there. I think the bigger and more interesting question is how will it impact the existing infrastructure and the way this infrastructure is being paid, and how all that is regulated. And that, I remember sitting on a panel with regulators, and I think some of them, as well as the DNOs and TSOs owner, will be absolutely sort of scared about what could happen or what may happen, because this is a new world, and I think it's very difficult to conceptualize.
Sounds like the subject for another panel, don't you think, Joe?
You're on mute.
David.
No, Joe's back. Thank you all very much for your thoughts and your time, and to perhaps have an attempt to summarising that. It's more equities needed, more flexible debts needed, more opportunity, and the time is now. So thank you all very much for your contributions, and over to you, Joe.
Thanks Thanks very much, everyone. I think there's a couple of songs there, more, and the time is now. Let me just see if I can get this slide up properly for you. So yeah, thanks very much to our panel. So David, Olivier, Peter and Marc. That was the penultimate panel for today. So good to see sort of a really good discussion during the afternoon. We have one more session left this afternoon, which is starting in about 15 minutes, which will unpack the Spanish auction. So if you're looking at sort of investments or operations in Spain, do make sure that you come and join us there. But for now, I'd like to say, gentlemen, thanks very much. And I will draw this session to a close. Thank you very much and hope to see you soon in person.
Thank you.
Thank you.